Great.
Mr. Corcoran,
Present.
Mr. Marquis,
Here.
and Mr. Krasansky.
Yep, here. Thank you.
We have a quorum. Thank you.
We have minutes from the April 8th meeting that we can approve if they look approvable. If anybody would like to make a motion to approve.
I'll make that motion.
Great. And a second?
I second that motion on the minutes.
Great. All in favor?
Aye.
Aye.
And I think I heard an aye out of Francis too.
Yes, aye.
Great. Terrific. Those are approved. Terrific. We're going to hear from, I'm looking around, if our auditors are on. Jeff and Martin, I think they're on.
What, Mr. Chair, we're going to review the audit committee charter first.
Oh, the charter first. Got it. Yeah. So we have to review the charter. Actually, last year I think we reviewed it and maybe made some changes. Tell me if you've the committee has any things to discuss about the charter. Anything you want to discuss or change?
No, Mr. Chairman, we had a pretty good discussion about it, and I feel very comfortable with it.
Great.
For approval again this year.
Terrific. Vita, anything?
Same here, and I have read it all again, and our responsibilities and the financial statement disclosure matters, so.
Great. Terrific.
I would make a motion to approve it.
Yep. Great.
I second.
Great. All in favor of approving the
Aye.
charter? Aye. Terrific. That's approved. Great. Now we hear we have a presentation from KPMG. Martin and Jeff are going to talk about their work this year, and we'll get through their presentation and ask them questions about it. Okay, guys?
I think you're muted, Mr. Dunbar. Still can't hear you. Jeff, you want to test your mic?
Hi, can you hear me?
We got you, Jeff.
Yep.
Marty, we can't hear you.
Maybe it's on your computer itself. We know you're a pro at this too, so. You know, I would be comfortable if you wrote it all out on a whiteboard and we just write it.
Sometimes
We
at the
cannot.
bottom of the screen, you turn your volume down.
How about now?
We got you.
Great.
All right. Hear you. Just kidding.
My apologies. This is my third meeting and I've used different platforms. So I apologize. Thank you very much for having us. We're delighted to be here to share the results of our 2021 financial statement audit. I know that in your package you have our presentation. Should I share my screen and bring that up, or does everyone already have theirs pulled up?
You can feel free to share.
Yeah.
Sure.
Perfect. This will really show off my talent.
Make up for the muting snafu.
You got it. You got it. You got it. All right.
Marty, I shared mine if you want me to do it.
Oh, thanks, Jeff.
Great.
We're a duo. So You know, what's funny, one of the things I was going to mention, and this was the same case as last year, with COVID, we're used to working remotely, and as auditors, we're used to taking up residence in conference rooms for long periods of time, you know, right next to management. And in our case, our office is also on Broadway. We are about as close to you as our people down the hall from us. So we're literally right down the street from EFC, the corporation, and so it's funny to be remote. So having said all that, thank you for sharing the screen there, Jeff. We've concluded our audit. We have a couple wrap-up items that we'll touch upon in just a few minutes, but to give a high-level recap, we commenced the audit back in the month of May, but leading up to that, we do a number of what we call risk assessment type procedures to make sure that we're all for the audit, identifying significant areas of focus, what financial statement accounts that we're looking at, look at the financials as a whole, logistical elements with management. And so when you're doing that obviously is sometimes a bit easier, but for 2 straight years, we've been able to come up with a pretty oiled machine in terms of sharing of information with your management team and us. And so overall, this year's audit went very well. We received the full cooperation of the finance team and other members of the corporation, and overall, the audit went very well. We do ask a lot of questions and request a lot of information, and so sometimes we're a little bit of a pain in the neck, and so we do appreciate all of management's assistance over the last couple months. So what we have here is sort of our overview page to give some other high-level snapshot in terms of the audit itself. And so probably the key thing here, we'll leave it on this slide, but on the next page we said we will be issuing a clean audit opinion on the financial statements, including the statement of position and the statement of activities or operations for 2021. So the clean opinion, the unmodified opinion, is the highest level of assurance that your independent auditors can provide, and you as an audit committee should expect that as the outcome of an audit, so long as appropriate internal controls and other activities are in place as it relates to the preparation of the financial statements. In terms of deliverables, so again, we issue our opinion, our financial statement opinion on the financials. And then there's this second dash here, independent auditors report on internal control over financial reporting and on compliance and other matters based on an audit of the financial statements performed in accordance with government auditing standards. It's a bit of a mouthful, but what that is, what that opinion or what that report essentially is in connection with our audit procedures, we observe internal controls. While we might not necessarily test the operating effectiveness and provide an opinion on internal controls, with that item that I just read to you, what that relates to is if we identify any breakdowns that are significant or material in internal control or instances of non-compliance that are material to the financial statements, we're required to report those in our opinion and report them to you. As part of our audit procedures, we did not identify any such control deficiencies in connection with our procedures. So again, that will also be a clean opinion or clean report. And then finally, the report on investment compliance with section 201.3 with respect to investment policies and procedures. And there's a series of agreed upon procedures that we do with respect to compliance with state regs with investments in cash management. And again, we've identified no reportable matters. Those procedures are all performed without exception. So Those three key deliverables that are the product of our overall audit are all clean and unmodified, which is good. And then this incremental report to you is our required communications under the audit regulations that dictate that we communicate to those in charge of governance the results of our work. So we're executing that with you now. In terms of pending matters, the financial statements will be issued sometime over the next few days upon your approval. There won't be any changes to the financials themselves, certainly nothing material. We'll do a final review, make sure that all the I's are dotted and T's are crossed. But what you have in front of you is what will ultimately be released and includes all the necessary disclosures in accordance with government audit, accounting standards, and as well as U.S. GAAP, or generally accepted accounting principles. A lot of disclosures. Generally, all of it is consistent with the prior year. There were no new accounting standards that needed to be adopted, so the financial statements before you should look somewhat similar to what you have seen in the past. And then what we typically do is we just do our down-to-date procedures, which is making sure that there aren't any material transactions that occur through the issuance date of our report that need to be disclosed in the financials. And based on the procedures leading up to today's meeting, there haven't been any such matters. So we just do our typical down-to-date procedures, and then we'll get the financial statements out the door. In terms of future reports, as we usually will prepare as we execute the single audit or the uniform guidance audit. That's the audit of the federal expenditures that have been incurred by the corporation. That's a compliance audit, and there is an element of internal control testing that does occur as part of those procedures. A number of those procedures have already been performed alongside with the financial statement audit that we've done here. And so as of this point, we don't have any material findings or issues or concerns with respect to that work. We expect to complete that over the course of the next several weeks, a month or so, and issue that report shortly thereafter, as we typically do. So that's the next item coming down the pike from an audit perspective. Jeff, if you wouldn't mind turning to the next page. So what the next couple slides highlight are a summary of the required communications as it relates to the audit that we just completed. So auditors' reports, I just highlighted those. One other item just that you see here, inside of our audit opinion on the financial statements, we do include a couple other paragraphs in there that are referring to other supplemental information that's included in the financials. These are routine matters that we include each year and we're required to, and that's more or less highlighting that in addition to the audit procedures we performed, there's other data that's incorporated into the financial statements, and based on our audit procedures, the information in that those supplemental schedules is reasonable in all material respects. In terms of significant accounting policies, as I just said a few minutes ago, those are all consistent with U.S. GAAP, including government auditing standards, GASB, and are consistent with the prior year. So nothing to report from that perspective. Moving along. In terms of misstatements or uncorrected or corrected adjustments, so as part of our audit procedures, as many of you are familiar, whenever we're doing our testing and we identify an exception or an amount that's recorded in the financial statements that's different than what we expect, we identify that as an audit difference, and we set up a threshold. Anything over a certain value, we're required to report to you, the committee, and we did not identify any of such adjustments in connection with our audit procedures. And in the rare cases, and again, this didn't apply this year, but in rare cases, there might be adjustments that we identify that are so material that The only way we can issue a clean opinion is if management corrects those amounts. Those are what we often refer to as corrected adjustments, or other amounts that might not be that large that management decides to fix based on something that we identify as part of our audit procedures. There were no such matters to report. So no misstatements or audit adjustments that were proposed by us based on the audit procedures we performed, which is a very good sign. What that really gets to is that the information that management is preparing and handing to us, we don't take exception to, and that is a good sign that the interim financials that you're looking at as a finance committee or as an organization also are more likely to be reasonably stated throughout the year too. So there's a good degree of reliance you can have on that. In terms of significant deficiencies and material weaknesses, internal control, as I mentioned earlier, we did not identify any control deficiencies or other reportable matters from an internal control perspective. And in terms of significant and unusual transactions, we didn't identify anything that gave us pause from that perspective. So those are probably the key takeaways. And if you can tell, that really spells clean opinion and no findings from an audit perspective. Go to the next page, Jeff. Thank you. This is kind of a rundown of some other items that we specifically evaluate as part of a financial statement audit under professional regulations. We identify whether or not there's any related party transactions that require disclosure of the financial statements or anything along those lines. There was nothing that we identified that seemed to be omitted from the disclosure in the financials. Certainly the relationship with the state of New York and other agencies is identified. So no matters to report from that perspective. In terms of illegal acts or fraud, we didn't identify any matters that gave us pause based on our procedures or concerns that are reportable to the committee based on our procedures. And as I mentioned before, we didn't identify any instances of non-compliance with laws or regulations based on the audit procedures that we've conducted. There were no significant difficulties that we encountered during the audit, and we received the full cooperation of management, as I mentioned earlier. So that really highlights the key takeaways from this year's audit. Jeff, if you turn to the next page, the next few slides we include more so for informational purposes. They give a little bit of a flavor as to some of the procedures that we're performing over some of the more significant areas. This first one in particular is I mentioned a minute ago, we didn't identify any instances of fraud, and the procedures that we perform under the professional regs, it really kind of gets to this slide here, is that there's a presumed risk of management override at every organization, and therefore we need to respond to that risk and design audit procedures to evaluate that, which we summarize here on the page. And again, as I said, we did not identify any matters that concern us from a management override, fraud, or any other matter as it relates to that. Some of the other significant accounts, I won't read every line here, but as you can see, cash and investments, making sure that that's complete, exist, accurate, valued properly. Again, making sure that they're compliant with the state regs as part of that agreed upon procedure report that we also issue, or the examination report that we mentioned earlier. Bonds receivable, significant activity on the balance sheet and the associated interest and related fees on the income statement. We evaluate those accounts to make sure they're, again, complete, exist. There aren't any impairment concerns, or certainly any material impairment concerns, things of that nature, as of March 31, 2021. So again, no exceptions were identified as part of the procedures there. On the other side of the balance sheet, on the next page here, bonds payable, go through, again, make sure that that's complete and accurate, accurately reported in the financials and all the appropriate disclosures. There's a significant amount of disclosures that are required with respect to debt under the accounting regs. Those are all complete and accurate in the financial statements as well. And then finally, as you see at the bottom, that post-employment benefit plan, as well as the pension obligation. We evaluate that, make sure that that's complete, accurate, valued properly, evaluate the actuaries' evaluation of that and their determination of what the obligation is and what's the models used, the assumptions used. We evaluate those as well, and certain data that's incorporated into their determination of the obligation at year on each of those obligations. And again, no issues to report from that perspective. So that's a brief rundown of some of the more significant accounts. On this final slide, financial reporting, as I said, that's we were evaluating all the footnotes. We have a 100-page checklist that tells us all the required disclosures and what's applicable, not applicable, and cross-check that against your financial statements to make sure that everything is completely accurate. Certainly those disclosures that would be material are included. We execute a number of procedures to make sure that we have our full understanding of the legal matters and that those are either appropriately disclosed or identified by management and tracked and ensure whether or not they're appropriately recorded in the books or disclosed if they're determined to be material. And then finally, as I mentioned earlier, subsequent events, we do execute procedures right through the date of the issuance of the report to make sure that no material matters are excluded. So a lot of work, and again, this is just a summary of our procedures and some of the results. So with that, I'll pause and see if there's any questions I can help answer. In fact, I guess that's probably those are the key remarks that I intended to cover to highlight the results of the audit. So this might be a good time if there's any questions that any members have to answer them.
Thank you. I have a specific question. I'll start with this, sort of a pretty narrow question, if I could. In years past, I don't know when it was initiated, but, over the last few years, a lot of discussion with that post-employment obligation figure, and so I'm pretty familiar with it, or at least I think I am. I think it's a significant a factor. Again, the nice thing is, EFT, not a lot of people, so it's really not a huge dollar amount. But I guess I'm wondering how it works actually. So because I know it's a snapshot, or I'm assuming it is, because so if you take on 5 new employees, for example, on a certain day, and then you do that calculation the next day, are you building in those expected, the lifetime workers, the average, salary, those kinds of things? I guess I'm wondering that, how much of an impact, when you hire, a cadre of new people, does that immediately impact that number, or is it not so much a snapshot, more of a rolling number?
Yeah, great question. So the way the accounting regulations are established, this is a little bit of a confusing area. There's a measurement date that's established so you're measuring at the end of the year, but a lot of the data that you're using is earlier in the year. In some cases, it can be up to almost 2 years or more. The data that's used, it can be up to 2 years old. And then there's some level of projection so that it gets you to what you can make an estimate at your measurement date, the date of the financial statements. So the people that are joining, for example, would be included in part of that update of the data that's used to make the estimate. And then there's also an element of the liability that's based on what you've essentially earned, what the obligation is for that particular employee is based on their years of participation, the expected level of coverage, for example, when it comes to post-employment benefit. When it comes to pension, on the other hand, that's a little bit of a different measurement. But so it's something that you're accruing through time. So if the ultimate obligation for one person by the time they retires, and I'm just going to make this up, $100,000, that's not what's accrued on day one. That's something that's slowly accrued over time so that that is achieved by the time that they reach their projected retirement or termination date. And then, so that's updated periodically and annually, I should say, for the next measurement date. And so that's part one. And then there's the actuaries take that, put it into a model to project that, and they use a number of assumptions, whether it be the increasing cost of healthcare, mortality rates, discount rates, so future dollars, future obligation discounted to today's dollars. So there's an interest rate aspect to that. So there's a number of those factors that go into it. And because of those assumptions, it does create, you said, that snapshot that in theory is always changing, but you don't really see it again until the next snapshot. And many times when it comes to, because of the discount rates and other things, you might have some assumptions on a particular day, March 31st, 2021, that within a few weeks later, because of changes in the market, imagine a couple of years ago with the market going down with COVID and interest rates changing very quickly, some of the measurements that occurred, say at December 31, 2019, changed pretty significantly just 3 months later. And the same can be said as we make our way around here back to 2021. So it is a snapshot, doesn't necessarily represent what it ultimately would be, but when you look at it on an annual basis, it usually does capture most of, it's still a good measuring tool for the potential obligation.
Great. No, appreciate the background. It's sort of like you said, combination in a sense.
Combination and complicated. That's yeah.
Got it. Thank you. Anybody else have any other questions for Jeff?
I'm just going to bring up that we did have an opportunity to be in executive session yesterday with our auditors and had a robust conversation. So that was very good. I don't know if you're going to get there, but I'm looking at page 35 of the whole presentation, page 11 of your presentation, a new and emerging accounting. Are you going to take a chat about that? Because my question is going to be on the 2022 cost associated with before the end of a construction period. It seems like that's something that would have a material effect on our business. What is your responsibility? What can our accounting professionals and team be doing or are doing in anticipation of the emerging regulations? Because as we just discussed, I think we've got the new ones down now and we're accustomed to it and our team is doing very well. So I'm just thinking about that number 89 and what that would mean to this organization.
Sure, great question. I don't think I'm mistaken. I think this one might not actually have a very material effect, and here's why. I think it has more to do with those who have the assets on their books, meaning the fixed asset, the infrastructure. And so what's the interest cost that's incurred as part of the financing and capitalizing that as part of the cost and the measurement of that. And therefore, I don't think that will have a very material effect on the financial statements. We'll certainly go back and double check that as we headed to, further into 2022 to make sure that that's indeed correct with the finance team. And I this is kind of it's a laundry list of new standards that are coming out over the next couple of years. The standard setters in the government world have been very active, and so too have they've been active in the commercial side as well. And a lot of this is related to some of the activities in the commercial world. The lease standard was pretty significant for a lot of organizations in the commercial world and has been rolled out here for the government side. And again, I wouldn't expect that to be very significant for the corporation. In terms of conduit debt obligations, we'll have to take a deeper look at that as we get into 22 to make sure that there isn't anything to be concerned about. I think that that's probably the next one that, what that essentially is getting at is what triggers the need to recognize debt on your books if you're more or less acting as an agent for it, what commitments need to be recognized versus disclosed in your footnotes. And so we'll take a closer look at that with the finance team as we make our way into 2022. So everyone knows well in advance what potential impact it could have on the financial statements. But yeah, that 89, I don't think should have a very material effect on the financial statements, if at all.
Thank you. I appreciate it, because when you just read it at face value, the word, and I know that President Rabito and the entire team like to be ahead of planning and be prepared for things.
You got it.
If I could, Vita's question reminds me of a New York State, very significant legislation that I believe it was last year. So not this year, last year, with new requirements, mostly around cybersecurity for banks. And I would say the way it was defined, other institutions that lend money, that handle money and that loan money, lend money. And again, it was intended for banks, but it was pretty broadly defined. And I guess I'm wondering, I don't know if it was a provision, again, exempting, New York State authorities. I wasn't looking at it as an EFC person. I was looking at it, as a university person. It was first initially defined, it would have included universities, and then they redefined it. But I guess I'm wondering, are you aware of that, or EFC being impacted by that?
I might be speaking out of order if I respond. I don't know specifically if that would pull EFC directly into that regulation.
We're talking about 23 NYCRR Part 500, and I'm imagining specifically the way that we transmit personal and non-personal information through emails, and if that might be beyond your jurisdiction as auditors, but that's something we should talk about. Thank you.
Yeah, we can check on that. Great, thank you. Let me go further than what Vita said. We had an excellent, wide-ranging conversation. The committee did with Jeff and Marty yesterday, and we thank them for their work on this. We also, it reflects so well on EFC as an organization, because they've been at this. They're very familiar with the organization, and things are not only a clean audit, but everything we talk about, it comes back to complement EFC. And Albert Schneid in particular is doing an excellent job for everything that we see and that they see. And we talked about his role and the information sharing, the testing of assumptions, the treatment of information, and the fact that EFC is very good shape right now. So we really appreciate the work of the auditors and EFC staff, and things are in very good shape. So just compliments all around, and really appreciate the information sharing and this audit in particular.
Yeah, not to pile on, Charlie, but thank you to you, Chairman Charlie, and Thomas, for setting up the quality time with KPMG yesterday with Marty and Jeff. It's very helpful, and they were very complimentary to the organization and to the processes and procedures, and especially to Albert and his proactiveness and reaching out to them and keeping in very good contact, which is something they highlighted as, they like to see from organizations. So
Yeah.
Thank you for doing all that.
Unless there are any other questions, I would seek a motion from the committee to accept this audit and to recommend to the full board that we adopt their report.
Chairman, I will make that motion to accept the audit
And I will second it.
recommendation to the board.
And
Terrific.
I will
All in
second
favor?
it, Chairman.
Yep. All in favor of recommending this audit to the full board along with the financial statements of the corporation? Say aye.
Aye.
Aye. Great. That's
Everyone should feel good about that.
yeah, very excellent, excellent. And again, thank you so much to KPMG for their work, over the years, and this year, and the fact they, the work they do, also staying in touch and really helping. I know Albert appreciates it. I know we appreciate it, and really, thank them for their work. So now we discussed, we have to talk about next year, I think it is, the rotation of the lead partner of our auditor. And I think there's another year that Marty can serve as the lead. We don't have to change firms if we don't want to, but that's just a heads up about that. So if everybody has anything they want to add on that, I think we have one more year of the lead partner being the same.
Well, we appreciate your service on EFC. Thank you.
And then I think we're required to talk about an internal control and audit function. We've talked a lot about this in previous years. I used to feel pretty strongly that we needed a little more internal focus on these activities. I don't feel that strongly. I don't feel strongly at all right now, given this conversation we just had, where things are, Joe, Albert. I think that, again, the size of the organization, the activities, everything going on. I think that my own opinion is that this is a good thing to talk about every year, and every year is different. But if anybody would like to has an opinion that we should have a little more internal, control or focus on this, let's talk about it. I think it's a healthy thing to discuss. Having more of an internal, somebody designated to be an internal auditor, or at least someone who people can go to, or somebody internally who can decide at their discretion to be a little skeptical or to check on certain things. If anybody's interested in that, let's talk about it.
Thank you, Chairman. Go ahead, Francis. Go ahead.
No, I was just going to say, I think that we were, at least on our committee, we were all of the mind that we were very comfortable with the roles that were currently being played, and with the auditors' involvement in what they were doing. And as we perhaps scale and take on more dollars and more personnel, then that might be something that evolves in place. But that as a committee, having long time talking about this over the many years, that we felt we really actually were in a pretty good place with Albert and with the auditors and with Joe and his team. A high level of confidence in our ability to audit, have internal controls, and confidence that the organization was safe and secure.
Yep.
I concur with both my board members, and I just wanted to add also that it was reflected back to us that, Albert able to ask questions periodically, that there are other touch points throughout the year if there are any questions. So that is also something that, is comforting and tells us that we're on the right track. So with that type of communication and attention to detail, I concur.
Yep.
Mr. Chair, if I may,
Yep.
we have, as part of the EFC 2021 initiative that has been driving us over the last 6 months and will continue over the next 6, we are internally talking about enterprise risk management and ensuring that while all the compliments and the hard work and the acknowledgement of the hard work are wonderful, we do realize we are stewards of these public resources. So we are internally discussing it and entertaining how to bolster that good work even more. So I think it's a conversation we'll be having with you a little bit further down the road this year. But again, on behalf of the team, we appreciate your acknowledgement of all the hard work of the team.
Yeah, thanks for that. And it just gives us a good feeling that, that you're on that. We already knew you were, just because I think we see you in action, and Albert, we talked to Albert, and we see what you're doing and everybody who works there. And we know that you take it really seriously. And in addition to that, I think it's awfully nice, particularly these days, is, a little bit of skepticism. Hey, this is how it's always been done, but wait, maybe we could do it a little bit differently, and not just assuming. And so that's refreshing. And what it does is it shows us that you and your team, everybody there, is always looking at, okay, but what about this? Or what about that? And just looking over other people's shoulders. And so we like that. So keep up the great work. And,
Thanks, Charlie. It sounds like you're in our staff meetings with what you're saying. So thank you.
I just want to add, President Rubito, I can't believe I am very pleased that you mentioned enterprise risk management, because I did bring that up in session yesterday and used that. And then we all did say that we believed you were doing that, if not on a spreadsheet in your brain, or in theory, you were putting that to practice. And I was going to give you a phone call to discuss that. So thank you so much for mentioning it, because it is a great means of looking at risks and how you're managing, and it's a great thing to review. So it was great to hear that. Thank you.
Yep.
Thank you.
Good. So, again, I just a sense I have, the committee, acknowledges what's happening, appreciates it. And we know we don't, at this point, we're deciding, that's great. Keep up the great work, everybody. And, good discussion about, the option of having us do something more, not necessary at this point. With that, if anybody has anything else to bring up, great. If not, I'll take a motion to adjourn.
So moved. Adjourn.
Mr. Chair, we have to make a motion to not move forward with an internal control. So we'll just take a first and second, and then we adjourn thereafter.
Mr. Chairman, I'd make a motion not to move forward with an internal control position.
I will second that motion.
Great. All in favor of taking a pass on that this year?
At this time.
Aye.
Aye. Great. That passed. Thank you, Thomas. And again, the motion to adjourn, anybody?
I'll make that motion to adjourn the committee meeting.
And I will second it wholeheartedly.
And all in favor?
Aye.
Aye. Thank you. We are.